Hey, welcome back to Everyday Economics. This is the podcast that helps you understand the economic world happening around all of us. Everyday Economics is brought to you by the Center Square Newswire service. I'm Krug, publisher of the Center Square, and Orphe Divounguy is my partner on the show, and he's a PhD economist. Today is December 22nd, 2025, and in this episode, we're going to take a look at 2026, maybe put a pin in 2025. And just reminisce a little bit about the year in economics, but mostly focus on what's happening ahead. Orphe, it's always great to be with you, and I think that my favorite part about putting this show together is the conversations that we have in motion, where you are doing what you do as an economist and trying to make sense of things, independent of the commentary that exists around economics, independent of other economists' thinking. It's fun to watch. It's fun to watch you work, and I mean the data is the story, right? But one of the things that I think is particularly special about the way that we have the conversation that we have here for the Everyday Economics podcast is the audience, or I should say audiences. So, over the last, I guess it's been more than 3 years since we started to do this. Without a doubt, we hear from economists around the country who say either like, hey, you guys nailed that, or hey, maybe I don't quite agree. But we also hear from a lot of people, students, in high school and in college who
That's right.
Just have more questions about methodology or about research. And, the last couple of months have been really particularly challenging, right? I mean, the government shutdown that was only, 43 days long, it put some snags in economic data. I think it's caused a lot of speculation by a lot of people. But you've been sticking true to the research methodology that you've always used. And I thought it'd be worthwhile to talk a little bit about that as you now make sense of 2025. Like what are your strongest thoughts about the last year and the economy?
Well, I don't know how to answer this question. I don't know if I should start with the fact that we're kind of where we thought but not quite. I mean, I can't say we were, we are exactly where we thought we would be, but we got the soft landing, right? We got to a place where the economy was headed into a good place, which is definitely something we talked about on the show a year ago. And then March, April this year, everything changed, right? The big shock, the big surprise, right? And I think this year was maybe the most defining feature of the economy this year was the back and forth on tariffs.
Oh, 100%. Yeah, I'd agree with that.
That basically just completely changed the trajectory of everything. And then to compound to to make the problem worse, the government shutdown that lasted forever, and so everybody was flying blind. I think it's been a very, very tough year for somebody who studies this stuff. Anybody trying to come up with a forecast, struggled. And had to turn to different data sources, right? I think one of the things I gave a couple talks this year about, what to do in these types of scenarios. And one of the takeaways was, you never want to cherry pick. You want to take all of the data that's available to you, and you want to ask the question, well, what story is consistent with all of these different data points, right? And you also want to make sure that, of course, when I say that all of the data, you want to make sure you understand how the data was generated.
Well, that's
In order,
important
right?
also. Right. What's
That
the source of the information?
I think that's number one, right? Because then you want to understand, you'll understand the source of bias. Where is bias coming from, right? And that's so. Anyway, that's what I gave people this year.
Yeah.
Well, because people were very worried about, at one point you had it. Remember, we had the BLS revisions, and
Hmm.
everybody panics, right?
Massive, massive
That's
revisions.
that's
It
right.
was
It,
880,000 jobs from the
that's
Bureau
right.
of Labor and Statistics that were supposedly put on the board in 2024 came off the board.
Yeah,
And we've
and
had
what's
and we've had some ongoing revisions during the Trump administration too. They're
that's
smaller,
right.
but in aggregate, so were the job gains.
That's right. And ultimately, the BLS very transparent about that. They have a whole handbook of methodology that, I think I encourage people to pay attention to.
Yeah,
Right. I think a lot of people just ignore it and just take the reported numbers and run with them, but actually understand the methodology, and you won't be so surprised by the revisions. They're perfectly normal.
yeah,
Uh, yeah. So I mean, going forward,
yeah. Let's talk about 2026. So I mean, it's like I can't like make you walk the plank on prognostication here, right? I mean, I don't want you to go too far out, over the edge. But what are the indicators that you're paying the most attention to right now? And what is it that you think will set the tone for 2026? Where should those of us who are trying to make sense of specifically the U.S. economy, what should we be looking at or thinking about right now?
look, ultimately, I would say pay attention to the labor market. It's all going to be about the labor market. I mean, even in you look at housing forecasts, and ultimately it's, will the labor market crack?
Mm-hmm.
Right? If the labor market cracks, then there's a demand. Consumer spending is also going to tip over. And so that I would pay close attention to the labor market. The other thing is on the policy front, of course, immigration policy, and I'm not going to get into the details because I don't know the details, but the number of people, the net flows of people coming in and out of the United States is going to play a huge role in consumer spending as a whole.
Mm-hmm.
Overall economic activity is influenced by people, the number of people and the trade-offs and the decisions they make. And so, that's also going to be important. And the last point, if you really want to know where we're headed, is productivity.
Yeah.
The few people that we have, are they going to be more productive? And if they are more productive, if they're able to make up for the lack or the maybe the potential decline in the number of people, right?
Mm-hmm.
Uh, that's why productivity is so important. Are we going to be able to produce more goods and services with fewer people?
Yeah. It's
Uh,
a great
so
question.
right, and so that is key because that matters for it matters for Fed policy. It matters greatly for inflation. It matters greatly for how the Fed will react to the economy in 2026.
Yeah.
Uh, yeah.
Well, let me ask you. So, last question, and we can end on this. I mean, certainly, a lot of Americans pay attention to the Federal Reserve and what the Federal Reserve is talking about. I mean, you study it, however, like a scholar. I mean, you watch Fed governors' speeches. You read the papers and the updates that come out of the respective from the respective Fed governors, and you certainly watch intently when Chairman Jerome Powell says anything anywhere. What do you think the Fed is most likely to do here in the first quarter? Of course, Jay Powell's tenure ends in May, so we're literally going into his last full quarter as the head honcho of the Fed. What do you think is coming our way?
Yeah, I think power or not, the Fed is going to have to. I think it's going to wait on January data. It might. It might pause in January, but start resume cutting again uh, in March, and every meeting, I would say maybe another potentially two or three rate cuts in 2026.
Mm-hmm.
Simply because I think markets underestimate. I think people in general, not just traders, but also even people at the Fed might underestimate how weak the labor market is.
Mm-hmm.
Uh, those are my thoughts. Um, that yeah, I mean, you all you have to do is go and talk to anybody who's out of work right now, looking for work, and it's the duration of unemployment has increased. The number of people looking for work and not finding work has increased.
Yeah.
Um, the younger Americans are the ones that are more uh, kind of trouble entering the labor force for the first time. So yeah, now I don't want to be all doom and gloom. I think every forecast has to have kind of here's a joke that a friend of mine told me one time. He said, if you ever meet an economist that's all sunshine and rainbows, run the other way. There are two there are there are two sides to this coin.
I never have. So I'm waiting for that day where I get to meet the sunshine, rainbow unicorn economist.
Yeah. You know what are some risks, right? To this. So to the forecast, right? So I led with the negative, which is the labor market
Right.
weakening further. Um, the positive is some fiscal stimulus
Yeah.
essentially. The current administration is a little bit similar to the last administration in terms of not wanting to first wanting to extend tax cuts and not necessarily wanting to rein in the spending. So I think you're gonna get some stimulus
Mm-hmm.
uh, there, which could be I guess good for saving the labor market in households that are starting. Now, of course, some people will argue with me and say, "Well, hold on, it depends, right? It depends. There's a distribution here. Some households at the top are going to get more than households at the bottom, et cetera,
Yeah.
right?" And that truly does matter. But I won't get into the weeds because I really not paying too much attention, although I probably should heading into 2026 because it's going to matter. Uh, but yeah, ultimately, overall, you're probably going to continue to see the big AI spending. That's not going to stop. I think we're
Mm-hmm.
probably going to continue to see that. And it's going to benefit some people more than others. And that's just kind of a fact of life right now,
Yeah.
the world we live in.
Yeah.
So yeah, so and I think that's going to be a somewhat positive, right?
Mm-hmm.
You got some downside, and then you got some upside, and that's the world that we are facing in 2026. If the labor market doesn't crack, I think we could potentially see not big, a small increase in housing market activity again,
Mm-hmm.
right? Right. Rates will probably stabilize. Mortgage rates will probably stabilize. They're going to stabilize in the low sixes, maybe. And then with that stability and the fact that if the labor market doesn't deteriorate, and kind of you get to a steady state of affairs, and the economist in the room will know what I just did there. You will basically get a modest increase in home sales, a little bit more balance. That's the optimist in me for 2026.
Well, I appreciate it. It's tough to look ahead. I mean, I know you don't have a crystal ball, um, but it's always fun. And I guess with that, it's another year of everyday economics in the books. So thanks as always, Dr. Rowe. Make sure that you read Orphe's everyday economics column each Monday at the Center Square and listen to what we have to say every weekend on the Center Square Radio Hour.